Hello everyone, how are you today? It's Kay. So this is the 10th of November and this is on Wednesday. So I hope you're having a great day today and let's get started. So this is a live stream, it's not a video session. So hopefully you can join and comment on the chat so that we can discuss on the markets today. So today for myself is a day off. Yesterday and the day before I was pretty busy on things here. So today I decided to take a day off. I mean day off from trading. So if I see, even if I see some trending pairs, even if I see some trading edges, today is a day for myself not to trade, just relax and just watch markets. So yeah, because sometimes, you know, when you feel a bit tired, when you feel, you know, not liking trades, then you can simply stay away. You can monitor charts, but you can simply stay away. Although you find some trading edges, psychologically speaking. So I think this kind of, you know, how to say, like this kind of, you know, room to trade psychologically is important. We have to have like a room in between ourselves to trading. Otherwise, you might be looking for the chances every day, every minute, every second, and that you'll be tired after all. So relax is the key to success in the long run. So today, as I screen charts, I think gold, XAUUSD gold looks to be interesting in its Ichimoku 5 lines and time cycle and price theory. So I will talk about that for today's main topic. All right, so let me split the window and start the session now. So before starting here, as a quick disclaimer, as usual, this content is basically based on my own experience and knowledge. So when you take trades, please do at your own risk. And since this is the live stream, if you can please follow the rules and guidelines, that would be great, because after all, we're all here to learn. So let me quickly say hi to everyone. All right, Minoru, Endo, good to see you here. Thank you for joining. And James, Bedsheet, Shan, Rongwat, and Karan, good to see you here. All right, Manmohan, and Sharad, Kareem, Restless, Arkady, and Sunil, Gege, and Alfonso, and Sarosh, good to see you. Thank you for joining. All right. Also, Rush, glad you're back. I hope your health condition is okay. Hello, Ajay, good to see you too. Thank you for joining. So let's start now. All right, so let me turn to trading view and we look at the gold together. So gold is bullish now. First of all, I will talk about the market in terms of Ichimoku 5 lines. And then I will add time cycles. Then I will add price theory, price target theory of Ichimoku and discuss up to where the market can go up after this breakout of the resistance level of 1832.74. So I was looking for the buy chance, but because I didn't find the confirmation to buy, simply I don't take it. And plus today, like I mentioned before, is my day off. So I decided not to take trades anymore. But you can see that there is a clear breakout here just happening right now in gold. So and this is ascending P wave structure. So ascending P wave structure is one of the Ichimoku patterns. And let me get this pen tool. So this is ascending P wave, ascending triangle. So you can see that the lows are higher. It's bouncing once, twice, and three times, while high remains the same level at the resistance. So this is ascending P wave. And when you see this, you can see that there are more buyers than sellers in the market. And that is simply because every time the market goes up this way, it's resisted at the same price level multiple times here. And sellers come in and the market pushes down this way. But it pushes down this way, but it doesn't reach to the previous high. It reached to the middle of the previous high, previous low here, and the pushback happens and goes up. And it goes up, but it doesn't renew high, but it was rejected here and retraced backwards. And retraced backwards, but it doesn't renew lower, and it keeps going up this way. So this is called ascending P-wave structure. And in the range market like this, we can see that there are more buyers than sellers in the market, and potential breakout upwards like this today. And also, if you look at the Ichimoku lines, it was also obvious that the market was break the resistance because you can simply see the Kumo's up, Kijun Sen Tenkan-sen up, and the Chikou span above the candles. So since a couple of days ago, I can just broadly play like a couple of days ago, you can see that the Kumo was already pointing up, and Tenkan-sen Kijun-sen was pointing up also, and the Chikou span above the candles. So there you can see that there is a potential breakout of the resistance in this case. And now it just happened this way. So this is so far price action and Ichimoku 5 lines analysis. So from here, it may retrace backwards to the previous resistance and bounces and goes up is a scenario. It goes like this way, or simply the market keeps going up from here without any pullback is a scenario now. So that's the basic analysis with the price action and also Ichimoku 5 lines. I hope this part is clear so far, because without understanding of the Ichimoku 5 lines and price action, we can't really talk about the price time theory and price theory here. Sometimes I've seen some analysis by price theory only, but it has to come with the 5 lines of Ichimoku and price action. So you can kind of integrate all these information into one, and you can make some powerful analysis on this. Alright, thank you for joining everyone, great to see you. And thank you for the reminder. Yes, if you liked it so far, please press the like button before you leave on this live stream so that it keeps me going. It would be great. So yeah, so far so good. It's the ascending P wave, and now Ichimoku is showing uptrend. So let me check the weekly chart. If you look at the weekly chart, the market is still within the Kumo now, so it might retrace backwards anytime soon in the weekly basis. But in the daily chart, it just broke the ascending P wave, and we can see potential continuation of the uptrend. So from today or tomorrow, we can start to look for the buy chance on this one finally. Okay. So now let me take out the time cycles. So time cycles are used to capture the breadth of the market. What I say, the breadth of the market, like as human beings, market also inhale and exhale, meaning it goes up and down like this. And when it goes up and down, there are some patterns in the market. Sometimes you will see the exact patterns, exact tempos of up and down in the market. So you can capture it by time cycle of Ichimoku. So let me take out the time cycle here on this chart. So here's time cycles. So if you capture time cycles, how you can do it is simply you take whatever highs or lows in the market and simply count back and forward and see if you can find some patterns in the market. So in this case, I started counting first of all from all the way top here on the 1st of June. And then if I count to the next swing high, which was made on the 15th of July, it was 33 bars in between. And 33 is what we call Kihon Suchi number. And if you are new to Ichimoku, Kihon Suchi means like a basic number, basic series of numbers. So Kihon means basic, and Suchi means number. S-U-C-H-I. Suchi means number in English. So basic number, Kihon Suchi, is a series of number in Ichimoku. So there are numbers, Kihon Suchi numbers, like 7. 9. First I have to put 9 and 17 and 26, 33 and 42, 51 and so on. So there are a series of numbers, and if you can Google it, you can find the series of numbers also. But basically, these are called Kihon Suchi numbers. And these numbers are from Goichi Hosoda and his team's study about the markets. When he invented Ichimoku in the beginning, he had the team, and after years of analysis, investigating the markets, they came up with these numbers for the time cycles. So, and they did the research on stock market and index, and it worked very well. And they didn't really mention about the Forex, but based on my experience, Forex Kihon Suchi number also works in a daily time frame. So here we can apply the Kihon Suchi number. Or if you see the same number of candles in between the highs or lows, that is also called Taito Suchi number. So Taito means equal. T-A-I-T-O. So here is a little bit of a Japanese lecture here, language lecture. So you can see Taito means equal and Suchi means number in Japanese. So Taito Suchi appears everywhere in the market, and it can be with any numbers. It can be with 20, it can be with like 25 or 50 or like 48, whatever is okay. If it happens consecutive, then that's called Taito Suchi, and that's also considered to be the pattern in the market in time cycles. So sometimes you will see this Kihon Suchi number appears consecutive Taito Suchi. So, well, that's also considered to be a powerful time cycles. So with that in mind, if you listen to what I say today, I think that will be a bit more clear. So that's why I just wanted to introduce these terms first. So let's see. So in this case, XAUUSD, first of all, let me squeeze like this way. And you can see the swing high here on the 1st of June on the daily chart. And then the next swing high was marked on the 15th of July. And when you count the number of candles in between, it was 33 bars. And 33 is one of the Kihon Suchi number, so that you see that the market respected the Kihon Suchi number and you went bearish afterwards for some days. And counting from the 15th of July to the future, the next swing high was marked 37 bars in between, which was on the 3rd of September. So 37 is not 33, it's not the same. So 33 is just by itself. And 33 is not the Kihon Suchi number. So if it doesn't appear again, then this time cycle is useless. We can't use this time cycle 37 by itself because this is not the Kihon Suchi number. So if you count from the 3rd of September to the next swing high, which is marked on the 22nd of October, it was 36 bars. Yeah, it was 36 bars. And you see some similarity, 37 and 36, only one candlestick difference. And you can see some pattern here. So in the highs, in the swing highs, you see 37 and 36 time cycles. So what you can expect in this time cycle is that in the future, swing high could be marked 36 or 37 hours after 22nd of October, which is going to be 10th of December. Yeah, so if it's 36 bars to the future, it's going to be 10th of December, and that might be one of the time cycle day like this. And these dates are 1st of July, 1st of June, 15th July, and 3rd of September, and 22nd October, and 10th of December. These days are called Henkabi in Japanese. Here is a little bit of a Japanese lesson also. Henkabi in Japanese. And Henka means change, and B means day in Japanese. So these are called changing day or day of change. So the market might twist, market might turn bullish to bearish, or it can accelerate the trend direction, are basically the meaning of the Henkabi. So if the market reaches 10th of December, then it may resist it and reverse backwards, or it will accelerate the trend direction upwards this way. And this is exactly the Henkabi here. And once again, this is, it doesn't happen exactly on that day. 1 or 2 days difference is acceptable. So it could be either 10th of December, 9th of December, or 11th of December. Around this date, the market might have pullback or pushback and goes up or down. Of course, in that timing, you have to also see how Kumo's forming, how Kijun-sen, Tenkan-sen are, and where Chikou span is. If you see Kumo's up, Kijun-sen, Tenkan-sen up, and Chikou span above the candles on 10th of December, then you can expect the market continuously goes up in this way. But if it's flat, then it might be range afterwards. But this is how you can capture a potential future Henkabi in this way. Right? And after you do this on the highs, you can do the same on the lows. So in terms of the lows, you can see the remarkable low here on the 9th of August. So what I do is I count back the candles from here to the previous swing low, and this was 37 bars in between 18th of June and 9th of August. It was 37 bars, and counting from here to that future swing low, you found to be 38 bars to 29th of September. And then to the next swing low, it might become here, 15th of November could be the next Henkabi. It hasn't come here yet. But if you see this time cycle on the lows like this, then the next low could be marked 38, 39 bursts to the future, which is going to be on the 19th of November. Yeah, so that means if you holistically see chart like that in that way, so 19th of November is in the future, and now we have the breakout of the resistance. So after the breakout of the resistance today, the market could pull back. And in my view, the market could pull back to that date, 19th of November, and push back like this way, because this is the potential low on these time cycles. So that's actually the analysis. So I will just adjust the arrow this way, and this is my analysis for this time cycle in this case. The market might pull back until 19th of November. It might be supported at the previous resistance level 1832.74 and continue to go up until the 10th of December, which is the next Henkabi for the high. So that is my analysis for this. So let me just delete this one little red because it might be confusing. So hopefully you get this idea so far. So this is the time cycle analysis on gold, together with these 5 lines of Ichimoku. And then I will add one more information, which is the price theory. Alright, so but before going furthermore, let me come back to some comments here now. Alright, thank you for joining everyone. Once again, good to see you. Good to see you. This is Wednesday, 10th November. It's yeah, the market is. I'm watching this gold as it broke the previous resistance level now. Minoru, you're welcome about the Japanese lesson. Sure. Some terminologies are in Japanese on Ichimoku, so yeah, I better explain fully on these terms, exactly what it means. Alright, so Roche says a time cycle is a very powerful tool to see potential retracing market or important market key points. Yeah, that's true. Yeah, time cycle works really in the daily chart or weekly chart. I don't recommend you to use time cycle in the lower time frames, but daily chart works for sure. In time cycle or the price theory are to capture bigger picture of the market. So whenever you decide to trade, you want to draw lines and you want to see price action, Ichimoku 5 lines to take trades. But time cycles, if you know about time cycles, then you can expect how long you can hold that position to the next Henkabi, or you can expect how far the market will move up or down by the price theory. And then you just watch the market and see how it plays out. And psychologically, you feel more safer because you have these marks in the future dates and price levels. And simply you just wait until the market reaches to this date and price level in the future. Yeah, let's see. Alfonso says Elliott theory suits in Ichimoku cycles. I don't use Elliott wave theory, so I'm not sure, but you can apply Ichimoku wave analysis, which I will show you soon about together with the price theory. Okay, so ready to move on to the price theory now. So I will just add one by one information like this. So now let's move on to the price theory. So I will just cancel time theory first because there might be too many lines. So I will just cancel time theory and apply the price theory. Okay, so these are the price target by Ichimoku on this N wave. So you can see that there are four price target. One is NT target, another one is N target, and other one is the V target, and then E target is at the highest. And there are more variations like 2E target, 3E target, 4E target, or we have many other variations, but these are the basic four targets offered by Ichimoku original teaching. So now you see the market, after the breakout, the market has now reached all the way to the N target. So as we watch the market, it might pull back here and retrace. And then if that's the case, then you will see that the N target was met and the market retrace backwards. But if the market keeps going up without any pullback, then it can potentially reach the next target, which is the V target. So N target is 1851.28 and V target is 1867.27. And if the market keeps going up all the way for some reason, then it will eventually reach all the way to the E target, which is 1906.11. In terms of NT target, it's already met here. So in this case, we don't look at this one anymore. Yeah, NT target is usable if the first wave is very long and second pullback is very shallow. In that case, you can use NT target, but not in this case, because the retracement was a bit too deep, so you can't use NT target in this condition. So these are the targets potentially for this gold uptrend. And briefly, how you can get these targets is that you can just take out this tool, the price range tool on the trading view, and N target. Starting from the N target calculation is, so let's say I will mark A. This is, let's say this is a point. It's very simple. Very, very simple. So you can just master this in one day, how to capture these targets. No calculations, just very simple way to do. So I just marked swing lows and high and ABC. So first let me cover N target. N target is you take the pips between A and B, and you apply the same pips from C, and you get the N target, the D point as N target. So let's see, I take from A to B, and it goes like this, and this is 5.23%. And then I just take this one and apply from C point, like this, from C. Then you get this D point. This is N target. So once again, you take A and B pips range and apply from C to uppers, and then you get this N target. And right now, the market is reaching to that N target right now. And also, in terms of V calculation, you take the pips in between B and C, So B levels here, the top is B here, and you take the C over here. So you take this range and you add on top of B. So if you add it on top of B like this, then you see you have the V target here. That's the V target. In the market hasn't reached the V target yet, but looks like it's going up that way. So after the end target breakout, we can expect the market go up to V target 1867.27 for the next target. And in terms of the E target, you take the pips in between A and B, the range between A and B, and you add this on top of B, like this. And then you get the E target, which is 1906.11. So this is how you can capture these three targets, and now it's going up. So let's see how far the market goes up. So this is about the time cycle, and time cycle captures up to where potentially the market reaches. Time cycle captures when the market will turn. So let me combine this price theory and time cycle together. So I will take out the time cycle again and show this on the chart. And then you see the marks like this. So on this time cycle, we are actually talking about the bigger time cycle. But on this N wave, we have to see this time cycle on NB, B and C and D. So in between A and B, on this N wave, the time cycle was 18 bars in between. And in between B and C, it was 9 bars. Right, so that means since the market is going up now, it might become a Kaito Suchi from B to C and C to D. That means the market will mark high on the 15th of November. So let me put the vertical line here. It might reach to that level, to either N target or V target on the 15th of November. And today is 10th of November, so we have 1, 2, 3 days still. So that will be 3 trading days, and next Monday is the 15th of November. So that we can expect the market continue to be bullish like that way until the 15th of November in this time cycle. So that means next Monday, it could reach to the V target. So if you're buying already, you can keep holding it until it reaches the V target. Or simply you can set the break even and keep holding until the 15th of November as the next Henkabi here in this case. You see, so I'm talking about this A and B and C pushback, and the D target is will be around 15th of November. But once again, it doesn't come exact. It doesn't always happen exactly on the 15th November. 1 or 2 days difference is acceptable. So it could be 13th of November, it could be 12th of November, or it could be 16th or 17th of November. But around this area, around this date, could be the next potential Henkabi is what I try to say here. So yeah, in that sense, I think this week will be bullish. So the market could go up continuously on that direction. And also coming back to Ichimoku 5 lines, you have to also look at the 5 lines of Ichimoku and integrate. So as you see Ichimoku, you see the Kumo Senko span B is up, Senko span A is also up, and Kijun Sen, Tenkan Sen both upwards, and Chikou span above the candles Chikou span's free from the candles, and this is showing bullishness also. But if Chikou span is with the candles, or if Kumo is flat, if Kijun Sen is flat, even if you see this analysis, the market might be traced backwards anytime soon. So make sure to see the Ichimoku 5 lines also and apply the time cycle and price theory to capture target in terms of price level and also the target for the future Henkabi dates. So let me squeeze the chart. And also one thing that is also important to notice here is that this E target here, 1906.11, is also the resistance from the June this year. It was exactly the resistance. So once the market reaches all the way to that level, it may be traced backwards, because it's also the E target on this N wave analysis. Yeah, so this is how you can apply on the live market. Most of the times on the time cycles or price theory, you will see explanation on the previous charts, but the question is if you can apply on the real market. That is more important. It needs to be practical. So I will keep these lines and let's monitor the chart this week, next week, and see how it plays out. And as the market goes one by one, I will explain what's happening and how you can view the market in this way. Yeah, so any questions, everyone, so far? So good. For those who are very new to Ichimoku, I think this is a bit complicated because Ichimoku 5 lines are really complicated, but now I'm talking about the time cycle, price theory, so too many information maybe. So if you're lost, then please watch this video archive again and again to understand fully on what I say today. Hello everyone, good to see you once again. I do see many comments. Yeah, BS, you're welcome. You're welcome here. So, Ichimoku is very, very deep. Ichimoku 5 lines is already deep, but if you apply time cycle price theory like this, it becomes even deeper and it becomes even more, stronger in that sense. Let's see. It says, hello Kay, I'm glad to be here. Thanks. How do I learn professional Ichimoku trading system? Do you suggest an educational resource? Ichimoku trading system I run the Ichimoku community here. This is monthly subscription, $30, and I have released 3 books in the community and the questions and answer sessions, and there are many members only videos. So if you want to know the essence, the depth of Ichimoku, then I recommend you to join the community and learn all the basics, all the advanced techniques about the Ichimoku here in the community. When it comes to studying Ichimoku, knowledge is important, but also you have to apply is also very important. So after I talk about this time cycle on gold, what you have to do is you have to draw these lines too on your chart. Please draw the lines on your chart and see how it goes and see how you think about the market as it progresses. And once you come back to my analysis next time, then you validate if your scenario was correct or not. This is how you can learn these forex tradings and also analysis in practically speaking. So yeah, you can read the books There is Ichimoku Basic Master Book that talks about 5 lines, and Ichimoku Basic Theories book that talks about 3 theories of Ichimoku that I introduced today. And also there is a book called Kyushu Lex. Kyushu Lex book is also available in the community. And so my true goal is to help you become a non-losing trader, and also to help you analyze charts holistically by Ichimoku. So never use Kumo only to trade. Never use Tenkan-sen, Kijun-sen only to trade. Or never use Chikou span only to trade. As a Ichimoku professional, you have to use 5 lines, price action, time cycle, price theory all together, and see the market condition correctly. All right, hello Kale, good to see you here. Yeah, it just broke the resistance now in gold. And time cycle shows the next Henkabi is on the 15th of November, potentially when the market reaches to V target or even E target on these days. Hello Roge, good to see you. Welcome back here. Archback says, thank you Kay. Are there any catalysts for metal Solar last hour? I'm not sure about that. All right. Yeah, good to see you. Thank you for joining. Okay, so yeah, so basically we're gonna keep these lines and monitor chart until next week and see how it goes. And you can apply the same on any forex pairs or index or any commodities. This is an example of gold, but I have done the time cycle analysis on the forex pairs also. So I will talk about the time cycles in my future live session. But you can see that the time cycles on Euro AUD previously, the market reached all the way down to the E target on the 29th of October. Since 20th of August, the market has been downtrending and the market reached exactly on the E target. It was also confirmed on this time cycle and price theory. So, and now it's turning backwards. So I will give you some analysis in my future live streams also. So please get ready and learn something new on my live stream. Alright, so I guess that's it for today's live stream. So yeah, so like I mentioned before, today is my day off. So although I do this live stream, this is not like serious live stream. This is like casual, and simply I like to do this. I like to socialize and share my views of the market. So it's just for just myself. But when it comes to trading, I have to be very serious, and I have to be able to make decisions sharply and correctly. And that's why in terms of trades, I took a day off today. So yeah, most likely I won't trade it today. Gold is going up, but maybe I will come back to the gold tomorrow. But for those who want to trade gold today, you can purchase it, and see if it goes up until the end of today. So, oh, I see another question here. Andrew says, "Hi Kay, thank you. Sorry, hi Kay, can you use the Ichimoku lines on Forex?" Yes, you can. You can use Ichimoku in Forex. I have been using Ichimoku in Forex for the last 8 years or so, and it's been working great. So you can apply the same as always. Yeah, so Rush and H, Archback, you're welcome everyone, you're welcome. For time cycles, yes, time cycles you can apply on the Forex too. In price theory also, applicable in Forex pairs. But in my experience, in Forex pairs are good, but sometimes Swiss franc pairs. Swiss franc pairs in the daily chart seems not really respecting time cycles. So when I see that, I will just mark it. But when I don't see time cycles on Swiss franc pairs, then simply I don't use it. And I just use pipelines and price action to trade. And I'm not sure about the NZD pairs because I don't trade NZD pairs because of the high spread and high volatility in the lower time. Alright, so yeah, I guess that's it for today. Thank you for joining everyone. If you liked it, please press the like button and please subscribe and click the bell button so that you get notified as I do this live stream or upload the video in the future on this YouTube channel. So until then, please stay healthy, stay safe, and stay gold. Okay, bye for now. Mata ne everyone. Thank you.